Hello, folks. This is Raj Sastri from Raj Option Trading. Today we will talk about few trading ideas for the next week, which is the week of March 22nd. So for that, let's look at you know John Carter's TTM trade. So first one is PAYC. It's a pay cycle. So if you look at PAYC here, we have 1 year chart here and 2 year 2 day and 5 year weekly chart and 10 year monthly chart. So in the 1 year 1 day chart, as you can see here, we got a nice squeeze forming here. So the yellow bars are getting shorter and shorter. We got a red dot indicating that it's a squeeze. And if you look at the short-term wave and the long-term wave, the bars are above zero, which is a bullish sign. So in short, in 1 day, 1 year, 1 day chart, we have a squeeze trying to, really, stock might be on the higher side as the squeeze unfolds. Next, let's look at a 2 day, 2 year chart. So here also we have a squeeze forming and we have yellow bars getting shorter. And even the short-term wave, I think yellow bars are getting shorter. Long-term wave, we got the bars above zero. That also indicates in a 2 day chart we have a squeeze forming here. It might fire on the bullish side, and we don't have any squeeze forming on either weekly or monthly. So with that, I would think this is a good trade, with the PAYC. And now let's look at a different type of chart. For that, I will look at a just one grid chart just to keep it simple. So let's go to page cycle again. I will also, yeah. So if you see here, we got page cycle. It's a 1 year, 1 day chart, and um, volume is pretty okay. On the balance, volume is on the higher side. RSI is somewhere in the midpoint. It is right now it's kind of over sold, so it's due for a bounce, I would think. DMI indicating the blue line is just a little above red line, and implied volatility is really not much. So I would think it's a good long trade. So with that, let's go into the trade itself in the option chain, and let's see what we can do here with the PAYC. So what I would do in this scenario for PAYC, it's a higher price stock, as you can see here, 372, and all-time high is 471. It's got ways to go to reach the all-time high. So depending on how much capital you want to put into this trade, one strategy is really I would go say 370, 380. This could be one way to do it. You could do buy a $10 spread, 370, 380. So if you do that, you'll pay $475. So if I confirm and send, so I'm paying I'm paying around $425, and I'm making $575. So really, you're a little more than doubling your money if the stock stays above 380 by 20th of August. And you'll break even if the stock stays above 374, which is hardly, it's like $2 or so above the current price. I think it's a good trade if you want to just don't want to spend too much money but still want to participate in a higher price stock. You could do something like this, and you don't need to wait till the expiration date. If the stock bounces, you can sell your spread for a profit. And if you want to invest a little more capital, you could even do 360, 390, a $30 spread. So something like 360, 390. So this is a $30 spread here. So you're paying $13, but you got a lot more room to run here. So by paying $13, which is one 133 the 1330, you have a, you can make 1670. So that's your max profit. So this is where you could do a little differently if you want, different way of looking at the trade. And you could do multiple things, and if you want to just go long with the call option, you could do delta 70 call option right here. You're paying a steeper price, $72, but you'll as the stock goes up, you'll make if the stock goes up by $1, you'll make 70 cents. It's got infinite profit potential. That's the other way to play this. And if you're really, really conservative, you could also do a little differently. You could buy 360, 370 spread. So it's really playing conservative. So if you do something like that, you're paying $515. But if you look at here, you're making 485 if the stock stays above the current price. The current price is 372. If it stays above 365, you'll make money. So this is a little conservative way to play. If you're not too sure about the direction but still want to participate, you could do something like this, by conservatively buying the spread, which is 360, 370, just below the current stock price. And you could also finance this trade. As an example, you could just for example, it's a 60-day out. So if you're really bullish about this stock, you could also sell a put spread, for example 372 here. You could go around 30 delta here, so somewhere I think we have 30 delta, 29 delta right here. So you could sell a 340, 330 spread here. And if you sell something like this, you could let it expire and make money that way too. So 340, 330. So you'll make $375 if the stock stays below 340 by the expiration date, which is 61 days out. So if you sell this, you'll bring in 375 dollars right away. And if the stock stays above this price, above 340, you'll keep entire money, and the option will expire worthless. But you don't need to wait till the expiration. If the stocks bounce off, you could you could buy back this spread for a profit. So this is one more way to play. And the next idea is really Netflix. So for that, let's quickly go to Netflix. So Netflix, if I go back here to the chart, so if you look at the TTM trend and squeeze, so as you can see here on the 1 year 1 day chart, we got a squeeze in the make. The yellow bar is getting shorter and shorter. The long-term wave is above zero. Short-term wave is also trying to get above zero. We are catching it a little bit early. And as you look at here into weekly chart, in the weekly chart we got a squeeze forming, and the long-term wave is above zero. So it's really a bullish sign here. So weekly chart is clearly telling us stock is going to bounce on the higher side, and daily chart is also indicating the same. So to take benefit of this, we could let's also go to a smaller one grid chart. If you look at a one grid chart here, um, volume itself on the balance volume, I think it's going pretty good. No big deal. It's trying to raise, go up. This is the yellow line here. Implied wall RSI itself is kind of overbought, oversold territory right now, ready for a bounce. And DMI at least indicates right now bears are in control, because the blue line is below red line, and implied wall is low. So I could let me also add a Jacqueline money indicator here, check-in money indicator. So even the money indicator is kind of showing us money right now is flowing out of stock, which is okay. We got our indicators, on the TTM. So with that, let's go to option chain and see what we can do here. So if I go to option chain, Netflix, we could do something similar. We could go 117 days out, 16th of July. Stock is at 512. I can go nearby here, 510. I could do 510, 520. I could buy this spread right here. If I buy this spread, I'm paying $4.70. If I confirm and send, by paying 470, I'm making 530 if the stock stays above 520 by expiration, or if the stock stays above 514, which is $2 from now, I'll be breaking even. So I think it's a good play here. Netflix typically bounces on and off, so you don't need to wait till expiration. If it bounces higher, you could sell your spread and make money. This is one way. And let's look at implied wall. I think we looked at the implied wall earlier. IV is so low here, 42. If IV is above 50 or so, I would sell a put spread. But since IV is low, I would not sell a put spread on this one. Next, let's look at match group, which is MTCH. So match group, if we look at the chart here, from a squeeze chart perspective, same story, 1 day, 1 year chart. We got a nice squeeze forming. Yellow bars are getting shorter, trying to go above. Same story in the short-term wave. Longer-term wave, bar is above zero, clear. It's giving us a bullish indicator. And we got a squeeze forming on the weekly chart here. Long-term wave is above zero. There is a chance that this might fire on the higher side, even though there is a red bar forming here. I think because we got the longer term wave above zero, it might fire on the longer side. So with that, match group, same story. If I go back to 1 day chart here, I mean one grid chart, we got on the balance volume is pretty steady. Stock is oversold, ready for a bounce back. On the DMI chart right now it's bearish because the red line is above blue line, and implied wall is relatively low. Check in money flow, it's trying to be a little bit flatter on the higher side. So with that, let's go into trade grid, option chain, and see what we can do here. I would go maybe 180 days out, give us some more room, and stock is at 152. On this one, I could even do 145, 155, and buy that spread. So if I buy this spread 145, 155, I'm paying $4.65 here, and if the stock stays above 149, I will not lose any money. That's a break even. I'm paying 465 and doubling my money. I'm making 535, which is a good deal. I think it's a little bit low risk type play, just a $10 wide spread. And you could even widen out the spread if you're a little more bullish on this. Instead of 155, you could even make it 160, because 155 is almost near the current price. You could make 160. You're paying a little bit higher, 688, but you're also making a little bit higher here. You're making 812. So that's also a good play. So with that, let's go to our next stock here, which is DOMO. DOMO. It's again, one of the big data type stock. So if you look at DOMO, if you go to TTM trend here, same story. We got a nice squeeze formed. Long-term wave is about zero in the 1 day chart. In 2 day chart, we got a squeeze just formed. Long-term wave is about zero. Short-term wave is trying to get above zero. And I think same setup here. And let's go to a little bit smaller chart. So smaller chart also, if you see here, we got oversold type situation here. Here the blue line is above red line. That's a positive bullish indicator. and on the balance volume, it's racing, which is good sign. And check in money flow is it's kind of sort of okay, it's flat. So with that, let's go to trade grid here and see what can be done. DOMO, I would go 152 days out. um, and one thing I notice here is looks like implied wall maybe a little bit higher here. Let's go to um, yeah, IV could be a little bit higher. I could also see IV right here in the options today's statistics too. So if you look at IV, current IV, oh, it's not high. It's 19%, not big deal. So what I would do in this scenario is really $64. I could buy 60-70 spread. So you buy 60-70. So I'm paying $4.65 for this spread. I'm making 535, like more than double my money, which is a good deal. And you could also, because it's a lower price stock, you could even buy the spread outright. I would buy 72 delta spread outright by paying $19 if you want to do that. If you do that, you have infinite profit potential. As the stock rises by $1, your option will raise by 72 cents. This is a little bit, bullish way of doing things. If you want to spend a little more money on this. Next, let's look at one more, which is FEYE, FEYE. FireEye is a, as you might be knowing, it's a security play, cyber security play. And let's go to the TTM chart here. Same story here. We got a dot forming, squeeze forming, both shorter term, longer term way above zero. Same story. We got a squeeze in the 2-day chart also. It will be also, as you can see, a longer term trend is above zero. So I think overall this is also a bullish play. And if I go to a little bit shorter chart here, smaller chart, same story here. We got you know on the balance volume is on the higher side. It's an oversold type scenario. And in this scenario, the blue line is just below red line. So it's currently it's a bearish scenario. And check in money flow is telling us money is flowing into the stock. So we would do something similar here also. What I would do is I would go to option chain for FireEye. I would go 180 days out. Currently stock is at 19. We could do, if you want to buy a spread, if you don't want to put too much money, I would buy 15 and 25 $10 spread. So if I do $10 spread, so I'm paying $4.25, 26 cents. For $26, I'm making more than double, 5.74, and my break even is stock staying above 1926. It's already above 1926. I would be breaking even if the stock stays the same. So this is one way to play it. Other ways you could buy 70 delta call outright. You're paying $4.17. For lower price stocks, this could be a better idea. You don't have too much downside here. You could buy this outright by paying $4.70, and as stock goes up, you'll by $1 your option will go up by 71 cents. This is the other way to play here. You got infinite profit potential in this scenario. We'll do one last one, and I will share the list with you. For that, let's go to SGMO. SGMO is Sangmo Therapeutics. This is into COVID and some of this vaccine biotechnology play. And if I go to the chart here, TTM squeeze, we are catching it a little bit early. Squeeze is in the making at this point. Long-term wave is above zero. I mean, short-term wave is above zero. Long-term wave is trying to get above zero. And we also have a squeeze in the forming, in the 2-day chart also. And we have a squeeze already in the, in a monthly chart here, and long-term wave is above zero. This is again a bullish indicator, and we could go to a one grid chart here. here I think we have on the balance volume positive. um, RSI, relative strength index, is gaining some momentum here, and blue line here trying to get above red line, so it's showing some bullish sign, not quite there, but it might pop up. Check in money flow right now, it's showing it's a little bit negative, money is flowing out. Let's go into the stock itself, the option chain. It's a $13 stock, which is not too expensive. Depending on how much capital you want to invest, one way to do is really you could do 10, 20 spread. You could buy the spread here, $10, $20. So so for this spread, you're not paying too much. You're paying $3.40, and you're making 660. You're actually more than doubling your money. So if the stock stays above 1340, which is hardly 20 cents above the current price, you'll break even. So this is one way to play, spread. Other ways, you could buy the 70 delta call outright, right here, pay $410, and you can participate. If the stock shoots up to 30, 40, you'll make nice money. This is another way to participate by buying a single option. So with that, let's quickly go into a summary. So in summary, we have a couple option plays for next week, March 22nd. So PayCycle, Netflix, you can see the list here. I got a couple more stocks added to the list here. We went through a couple of them, and also if we have more here, SYNH, Sangmo, Monster Beverage. So with that, this is a wrap. Thank you very much. Happy investing. Thank you. Bye.